Good afternoon, everyone. Welcome back to the Discounts Daily Technical Analysis and Day Trading Show. As always, kicking off here within the day trading channel, the Lazy Day Trader. Not a whole lot going on today, guys. We had kind of a hangover Monday as it relates to the wild whipsaw action that we saw on Friday. We kicked it off here with a little bit of history. Today was actually the day where the S&P 500 hit its peak in the dot-com bubble. Always like to kick off a little bit of fun. And again, it wasn't really, it was kind of a range bound day. We're going to get into the charts. I had a short trade set up from 399 to 400. It was a simple $1 zone, a little bit wide, but nonetheless, it came up short of it. And then we had some day trade setups. Again, just the volatility was not there, but that's okay. We wait for our setups and our setups only. As you can see, one more on PAAS. So the metals, as you can see, the theme for today is above. We had GLD, AU. The metals were getting hit pretty hard today. Just did not see any follow through or enough follow through, at least for me, to take a day trade. So again, guys, as I mentioned, SPY 399 to 400 it is an aggressive overhead resistance zone, and then we can head down to 397, which you'll see found some support. But the really good long opportunity for me, at least, was, excuse me, 395.75, which happened to be the gap left open from Friday's close. And I give you the stop for all of these as well. So this was pretty much me the entire day. And let's get into it. So here we have the SPY daily chart, and as we've always been saying, and it still stands true, at least for the time being, you have this downsloping trend line, right? We are bullish above and we are bearish below. Right now, we're really just hugging it. We are still in that bullish, zone above the trend line, but it still has a lot to prove, right? We need to see some consolidation here. Needs to get above this daily moving average, and then we can start testing some higher stuff. You have this breakdown box right here, as I like to call it, which is really going to be some overhead resistance. So we could consolidate below that. You could push above into the 420 zone, which is a gap, and it's definitely magnetic. Now, this is obviously not going to be all in one shot, as I kind of made it seem like in this drawing, but you can see where my head is at. This is an important zone right here that should get filled. And if we really are extremely bullish and the Fed is going to come save the day and the markets love that, we should come up into this 450 area on the SPY. But that is far away for right now. Let's just play it day by day and see what we get. So going into the daily chart, again, see this was the short zone right here. It came up literally by, let's see, what was the high of this candle? The high was 398.92. So we literally missed it by 8 cents. That would have gave you a great short trade for the day. And then I really wanted this to get right into the gap, but of course they don't make it that easy. And I did not take it when it got down here because it was lunchtime, and when it was starting to chop above here, I just did not want that action anymore. But any trader that took the numbers, good for you. That ended up being a great trade. And we're closing on the day pretty neutral. We're pretty much flat on the day at what was that? Yeah, 0.08%. So we're pretty much flat on the day. Nothing to make a federal case out of, other than, again, if we go back to the daily chart, we are bullish above and we are bearish below. Now, something to note just on the weekly chart, we have a huge inside bar breakdown candle, right? From, let's see, what was this? This was the week of the 6th, week of the 6th in March, and we're really just climbing this breakdown candle. So a case can be made that we're really just climbing this breakdown candle, eating time off the clock to make another push lower, and that certainly could be the case. I don't see that right now, just reading the charts, but that can certainly be the case. If we could recapture, and like I've been saying, it's all about this area here, which coincides with about, I think, 404. Let's go back to this chart right here. Coincides with, about 408 or 404.8 on this chart. And we really got to recapture that to see any more upside in this market. First things first. Um, so that's pretty much it for the day, guys. Not a whole lot. I'm expecting a little bit more action and volatility tomorrow because we have some economic news coming out. I think it's consumer sentiment. Not sure. Have to double check. Well, in any event, we did have a couple late. I just want to show you guys what some of the alerts look like now. I'm just going to set them up pretty straightforward as they come in on the day, so you get a picture. And it's going to come in like this, and should be pretty straightforward moving forward. Hopefully, this is helpful for you guys. We almost had TSM come in, which is the Taiwan Semiconductors. This almost came into the level. I think it was about 50 cents or 75 cents away. Nonetheless, didn't get anything today. No worries, guys. I just want the levels that hit, and those are usually the best levels for me. So moving on to the tech sector, the QQQ, which is the NASDAQ, the proxy for the NASDAQ. So this was down slightly on the day. It's kind of a little bit weaker than everything else. As you can see, the Russell was actually up, which is kind of indicating maybe some relief ahead. This is all magnetic up here. So something I want to point out is the Russell being a leading indicator. Let's get rid of that. All these moving averages, as well as this gap right here, that is all magnetic. So while everything can be rallying, including the S&P 500 and the NASDAQ, this can rally up, fill this gap, chop around, not break above, and then resume downtrend. That's certainly possible there. But just something to note, guys, it is a little strong comparatively, and then tech was slightly weak. So kind of expected, though, because look at this rally so far. It's just kind of a simple retracement. And again, like I've said, it's nothing really to worry about. You had this major pivot right here. This was a high of a breakdown candle. And then this is all coming in at about 296.90, which is also coincides with the low of this breakdown candle right here. So as long as we stay above this breakdown candle low on a closing basis, even if we come back down, let's get the trusty pen out here. Even if we come back down and say a nasty sell day, let's say we retest the 20 period moving average, the 50 period moving average, which by the way should be a great day trade. This can recapture and this can blow off, right? So all of that is certainly possible and just something to keep on your radar. Bitcoin is the last thing I wanted to go over today, guys. So like I've been saying, the gaps are magnetic. It went and filled this gap, which was a great short scalp or short trade, swing trade opportunity. It's still in the money. So whoever took that trade, good on you. And it's not really wrong until it gets about above 31,500, I would say. So 31,500 is where this starts to become very wrong. And you're likely going to fill this next gap up at around 35,600. So I'm going to add my stuff back in here because something I want to make note, and a lot of people are probably laughing at this right now. All I took was a copy of this image right here. Obviously, this is not probably how it's going to play out. But look, if the markets, like I've been saying, if the markets want to catch a bid, this would really coincide perfectly with the bullish case for everything. And it would coincide with filling really the last gap or major gap that I see on the CME futures, which is magnetic, like I've been talking about, at 5,300. It would also coincide with the summer doldrums effect, which is low volume type of bullish scenario. And then guess what? A bearish fall, right? A bearish autumn in in August into September and October. And then that's when you're really looking for, potentially some nasty downside action into the end of the year. And I expect Bitcoin to fall pretty hard with everything else. But this is some pretty longer term stuff into the year. But I'm just saying that, look, if we're staying above, let's get rid of this for a second here. If we're staying above 25,000, which is really this key area right here, if we're staying above 25,000, let's get out the pen. And this is really just a breakup candle low. It could come down, test, the 20 period. It can chop up a little bit, and then it can blow off again. and fill this gap right up here and this breakdown candle high. So all that stuff becomes magnetic if we're in a bullish tape. Now, I really also think that it could come down and start testing this middle range uh, period right here, or this middle range area, and still be okay. But obviously, structurally, it starts to look a little bit different. And the short trade, obviously, we're just playing both sides of the tape here. The short trade, obviously, that is a great second target. I'd say 25,000 is a great target. And then you have kind of this middle area, let's call it 22,000 right here. So I think all of that, guys, if you mix it in a pot, the trend is bullish. So don't try to fight the trend necessarily with all you have, but just wait for the best setups. And right now, there's really nothing to do on Bitcoin. If you took the short trade, that was the trade. And that's pretty much it for now. Just let's see what it does. Let's see how far it goes. And we'll take it from there. So thanks, guys, as always. If you have any questions, hopefully the Day Trader channel is helpful for your day trading. We're going to continue it moving forward, obviously. It's been a blast so far. So thank you, everyone, and have a great rest of your night. Take care.